Hi guys, this is Dr. Mahmoud. In this video, I will be continuing on the balance sheet. So what I want you to do, I want you to go to the D2L and I want you to download the sheet, which is called the balance sheet example. So I will be sharing my screen in just a second here. All right, so I hope you guys see the D2L here. And now what I want you to do, I want you to go to the balance sheet example and click on download. And then click open that sheet. And the sheet should look like this one here. Right, I will be sharing the screen. All right, here we go. So you should see this balance sheet for 2014, 2015, and showing the changes from 2014 to 2015, and the percentage of the changes and whether we concerned or not about the performance of the company. So what we need to do is starting with the assets. There are two types of assets, as I mentioned in the previous video. One is the current asset and the other one is the long-term assets. And we have some categories listed here under the current assets. So what we need to find out to find the total of these by finding the sum of these numbers, the 400, 900, 180, and $20,000. These coming from the cash and cash equivalents, short-term investments, accounts receivable, and inventory. Close the parentheses and click OK. Same thing we're going to do for the long-term assets, adding these numbers, depreciation, lands, and machines. Add the sum here, open parentheses, and select the numbers and close the parentheses. And moving into liability and equity, we have to add the total current liabilities coming from account payable and short-term debt, adding this number to this number right here. These are coming from, again, this is the total. 130 is the total for the current liabilities. Long-term liability, we have only one transaction, which is the long-term debt of $1 million. And these are loans that not due for a year. Basically, go back to the description and find out what would be the definitions of the long-term liabilities and the short-term liabilities or current liabilities. This section in particular, these are the loans that we have to pay for the bank. One is a short-term, you have to pay it within 1 year, such as the 130 here. It has to be paid within this year, and a 1 million, it's due to the bank, but it's not due this year. All right, now moving to the total liabilities, adding these together, the current liabilities plus the short term or the long-term debt. And now for the total equity, we have two kinds, the retained earnings and common shares. Add these together, same thing. We're going to use the equal sum, the sum function, and close the parentheses. And now for the total liabilities and equities, we add this number plus the total liabilities, this number, and that will give you 1.6 million. Now moving into this question here, is the sheet balanced? Does assets equal liabilities and equities? Let's take a look. Here is 1.6 million for liabilities and equities, and assets right here. The total assets would be the 1.5 million plus the 115 here, and that will give you 1.6 million as well. So is it balanced? Yes, it is. So that's the answer is yes here. Now, what I want you to do, I want you to buzz the video right now, and I want you to do the 2015 the same way that we did for 2015, and then you can come back to see the answer. All right. I hope you buzzed the video and you have some answers. So now let's check how we could find the answers for these. Starting with the current assets, Control C. I'm going to use some shortcuts here, basically copying the function from here to here. And now we're going to do the same thing for this one. For the long-term assets, the total assets, adding the long-term asset with the current assets, give you 1.9 million. And now for the current liabilities, add 35,000 plus the 89,000. Now for the total liabilities, you add the long-term liabilities plus the current liabilities. And now for this one, total equity would be this, adding these numbers together. And for the total liabilities and equities, you add the total equity plus the total liability to give you 1.9. Now we have to answer the question, is this sheet is balanced for 2015? Look into the total liability here, 1.9 million versus 1.9 million. These are equal to each other. So yes, it is balanced. Now, the last thing that we need to do is to find out the changes, and the changes would be, so I'm going to delete this here to show you how we could find the changes. Delete. So the changes would be 2015 minus the number in 2014. I will give you changes 200,000 in cash and cash equivalencies. So 2015 is more cash received. We're going to do the same thing for the rest of these here. All right, so that would be the values for these numbers. So let's use these here. All right, so we don't need that here. We need to copy the format to here. So that would be the same. Same thing, we need to do the format here, make it equal. And the same thing for this one here, that would be equal to this one. So what I'm trying to do here, first of all, I did find the change by subtracting this column from this column to find the change in each category of these. And that will help us to find the change percentage, the percentage in change. So for example, let's find the change. Let's do, I'm going to delete these just a second here. Let me fix the format first. Right now, copy this here, the format for this cell. I want it to be equal to this here. All right, and now this cell, I want to copy the format for this cell to be this here. And the same thing for this. And now for this one should be equal to this format. And then this would be equal to this here. And the format for this cell, we need to copy the format to be on here. And the last thing we need to do is this one here, copy to be here. All right, so now we fix the format, and the format coming, because of the copy and paste. So what we did here, the changes, we subtracted the numbers from 2015 minus the numbers in 2014. And for the changes percentage, what we need to do, start with a 200. We do the 200 divided by the number in 2014, and we find out that this is a 50% change. Let's find the same thing here. 275 divided by 1.5 million, that will give you the percentage. And then we'll do this here as well. That's a negative 5% for the depreciation. Reduce the depreciation from 100 to 95. All right, so this is not valid, so we don't want that basically. And for this one, the percentage for the total current assets, the changes would be 55 divided by 115 to find 48. Same thing for 330. Divided by 1.6 million to find out that the assets increasing by 20%. So is there any concern here? No. Same thing for this one. The current asset improved by 18%. There's no concern. Let's continue with this current liabilities, focusing on the total current liability change divided by 130 reduced by 4%. So that's great. We reduced the loans that we are paying for the banks. Same thing for this one here. Let's do find the percentage. 105 divided by 1.13 million, reduced by 9%. So the total liabilities between the long-term liabilities and short-term liabilities, the current liabilities, reduced by 9%. So this is not a concern. I'm happy to see this change. Total equity. Now this will measure the interest of people in buying the shares for the company, increased by 90%. That's amazing. So that there's no concern. and the total equity and a liability in general. Let's see, divide this number by the 1.6 million. That will give you 20% overall increase. So there's no concern as well. Overall, we don't have any concern for the change in status from 2014, 2015. And we see a lot of people, more people interested in your company. That's great. We see a lot of cash receivable and more cash coming into the company, whether the long term or the short term. So we're happy to see this, less loans being required to be paid. So that's amazing. All right, I hope this is helpful. I tried to simplify it as much as I can. So please let me know if you have any question, and I would be happy to answer your question. Thank you very much.